You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and US sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome along to the deep dive. We're here to basically cut through all the noise for you, give you the essential market and news briefing for Monday, October 27th, 2025. We've sifted through, well, a mountain of data, FX, commodities, trade policy, geopolitics, and boiled it down to the key things you really need to know for the week ahead.
Yeah, it's a big week. Lots of tension, lots of potential pivots. If you want the quick version, the shortcut to being informed, keep your eye on two huge things happening almost at the same time. There's the big Trump-Xi summit everyone's been waiting for, and then bam, a whole bunch of major central bank decisions dropping. We're talking the Fed, Bank of Canada, Bank of Japan, the ECB, all weighing in.
Right, and that mix of high-stakes politics and monetary policy creates this kind of strange market mood, doesn't it? You've got the U.S. dollar holding pretty steady, which suggests caution. But then at the same time, currencies that usually thrive on risk, they're actually doing quite well.
Yeah.
Oil dipped a bit after early gains, but copper's just booming, riding that wave of trade optimism.
It's sending really mixed signals, the whole market.
Exactly. It's a perfect picture of that contradiction. So let's maybe dive into the currency landscape first, because it really shows the market hitting pause, but also like making some big bets on the diplomacy side.
Good place to start. The U.S. dollar index, it's basically parked near 99. It honestly feels like traders are just holding their breath, waiting to see what the central banks say.
Totally sidelined, waiting on the Fed.
Yeah.
And the euro seems pretty similar, right? Didn't really budge much.
Not really. We had that German IFO data come in a bit mixed. That's the big business climate index in Germany. It tells you how execs are feeling. It's sort of meh. And then the ECB basically said, yep, current rates are fine. So no drama, no movement.
Okay, but sterling's up a little bit. Seems like it's getting a boost from that general risk-on feeling we mentioned, and also some positive comments from Chancellor Reeves during those Gulf trade talks she's having.
Right. Now, Asia, that's where things get really interesting, I think. The yen is hovering around 153 to the dollar. Normally, when people feel optimistic, risk on, the yen weakens because it's a safe haven. But we got this stronger than expected Japanese services PPI data.
Producer price index. So inflation on the producer side, before it gets to consumers. If services PPI is strong, doesn't that kind of complicate things for the Bank of Japan? They've had loose policy for so long. Are traders maybe reading too much into just one data point there?
That is the million-dollar question, isn't it? That strong PPI number is definitely putting a floor under the yen, fighting against that global risk mood. It adds a layer of complexity just before the BOJ makes its call. And then you've got the yuan, clearly being used as a political anchor right now. They set the fix stronger for the second day, running 7.0881. That's its strongest in, over a year? Beijing is definitely trying to project stability before Trump and Xi meet.
And that signal seems to be getting picked up across the Pacific. Those high beta currencies, you know, the Aussie and Kiwi dollars, the ones really sensitive to global growth moods.
Yeah, they're doing the best out of everyone, really. All because of this fresh optimism about U.S.-China trade. They're the clear winners in this risk-on phase.
But, and this is a big but, look right next door. Canada, the Canadian dollar's holding up okay, even though Washington just slapped an immediate 10% tariff hike on Canadian imports. Trade friction is back on. So the market's betting on China optimism, but kind of ignoring this direct hit on a major trading partner. It's weird.
That sums up the confusion in FX perfectly, doesn't it? And that confusion seems to spill right over into commodities. We're seeing a big split there, particularly energy versus metals. Let's hit oil first. It was up initially on those positive trade headlines, but then it kind of drifted back down. Brent's around $66, WTI near $61. Seems like some profit-taking kicked in, plus those ongoing worries about too much supply just won't go away.
The supply details are interesting, though, especially with OPEC. Iraq's oil minister said they're sticking to their OPEC quota, 4.4 million barrels a day.
Yeah, and that's key because they could technically pump more, maybe closer to 5.5 million barrels, so they're deliberately keeping about 1.1 million barrels off the market. That gives OPEC a lot of, well, wiggle room, a lot of leverage. Oh, and on a sort of side note, there was a pipeline fire at Iraq's Zubair field. Some workers were injured, unfortunately, but production wasn't hit, thankfully.
Okay, and looking longer term for energy supply, U.S. Energy Secretary Wright announced some pretty big plans, doubling U.S. LNG exports in 5 years, and maybe doubling again in the decade after if the demand's there. That's a massive shift.
Huge structural change. And internationally, another big piece. Total Energies looks ready to restart that giant $20 billion Mozambique LNG project. It's been on hold since 2021 because of security issues. So that suggests confidence is coming back to major African energy plays.
Okay, let's get to the metals story, because this feels like the real aha moment in commodities this week. It's totally divided. Gold is down around $4,040 an ounce. Feels like investors are ditching the traditional safe haven because things look better between the U.S. and China.
And where's that money going? Clearly into industrial metals. Copper prices just blasted past $11,000 a ton. That's the highest since May last year. And it's very specifically linked to that optimism on trade, plus some stronger Chinese industrial profit numbers came out too.
They call copper Dr. Copper. Right, because it's supposed to predict economic health. If it's soaring like this, what's it telling us? Is it saying global growth is really about to pick up?
It's saying the market is pricing in actual physical growth, not just hope. It signals a belief that industrial demand, especially out of China, is set to accelerate now that there's a bit more diplomatic stability. Copper's basically saying, yeah, those big tariffs, maybe they won't happen after all.
Which leads us perfectly into trade and tariffs, the real engine behind all this market action. Specifically, that framework deal for the Trump-Xi talks. It managed to head off a planned U.S. tariff hike. That seems to be the core reason for the relief rally, especially in copper.
Absolutely. And China's response was quick and concrete, delaying their new rare earth export licensing system for a whole year.
Yeah.
That's a pretty big concession, given how strategic rare earths are. And both sides also said they'd talk more about tariffs and export controls, build some trust.
Yeah, and reports suggest they're making headway on some of those tricky issues too, like fentanyl controls, agricultural buys. U.S. Treasury Secretary Bessent actually said China's ready to buy substantial amounts of soybeans.
Right.
He stressed how that'll help U.S. farmers for years once a final deal is inked. That's a big political win, getting that immediate farm relief.
Yeah, and while that huge negotiation is playing out, Washington's also busy building this new trade structure over in Southeast Asia. They've signed these framework deals with Thailand, Malaysia, Cambodia, Vietnam.
Okay, let's break this down a bit, because the way they work is interesting. They keep the main tariffs, right? Around 19–20%.
Yeah, the headline rates stay.
But they create a path to zero tariffs for countries that sort of play ball, align with U.S. goals. It's very targeted.
Exactly. It's strategic. Washington is clearly using market access as a carrot for policy alignment. Look at the details. Malaysia gets better access for U.S. industrial goods and critical minerals like rare earths. But Cambodia, wow. They agreed to scrap tariffs on all U.S. industrial and farm goods. Full alignment.
Total alignment.
And Vietnam's deal is more about reciprocal access, balancing trade. It's very deliberate regional diplomacy, trying to shape Asian supply chains for the next decade, really.
But then we have to swing back to North America. And that immediate sharp conflict, Canada.
Yeah.
That sudden 10% tariff hike on Canadian goods, just as things ease with China. It's such a stark contrast.
It is. Prime Minister Carney says Ottawa's ready to talk, but significantly, he hasn't actually spoken to President Trump since late last week. The fact that they can't quickly smooth over these established trade issues, that remains a big risk factor right here at home, even if things look calmer globally.
And elsewhere, UK Chancellor Rees is kicking off trade talks in Riyadh, trying to speed up a UK Gulf Cooperation Council deal. It feels like trade talks are happening everywhere all at once.
Which leads us to our last pillar, geopolitics. Global tensions are still very high, obviously, but we're also seeing these surprising bursts of diplomacy, some intense coordination efforts.
Starting in the Middle East, tension is still acute there. Israel confirmed another targeted strike in central Gaza, and the U.S. is reportedly working on a UN resolution, maybe for a multinational stabilization force. That sounds like planning for what comes after the conflict.
It does, and President Trump also issued that very direct, very public warning to Hamas, demanding they start returning the remains of hostages within 48 hours. That's immense pressure, a very tight deadline.
Okay, shifting to Russia and Ukraine. Still a stalemate. President Trump says he won't meet President Putin until there's a concrete peace plan on the table, a clear precondition.
The Kremlin kind of brushed off top of cancellation, saying, delaying talks isn't helpful for anyone. But the military actions continue. Moscow ran a big nuclear forces drill. President Putin made a point of saying Russia's strategic deterrent is reliable.
And the economic pressure continues, too. President Zelensky in Ukraine is calling for more sanctions targeting Russian oil firms, the shadow fleet moving the oil.
Right.
And UK Prime Minister Starmer repeated the commitment to try and use frozen Russian assets to help fund Ukraine. That financial angle isn't easing up.
Meanwhile, Asia is buzzing with diplomacy. You've got the ASEAN Summit in Kuala Lumpur. Nearly 24 leaders are there.
And that really significant news announced by President Trump, Thailand and Cambodia signing an actual peace treaty.
Yeah.
Apparently achieved with U.S. mediation. That's a solid diplomatic win for Washington.
Definitely. And after that, President Trump heads to Japan. Meetings with Emperor Naruhito, Prime Minister Takaichi. The agenda's heavy on defense, yes, but also high-tech cooperation. The key things there are agreements on quantum computing, fusion energy, space. This isn't just about security today, it's about making sure the U.S.-Japan alliance leads technologically tomorrow.
And finally, keeping an eye on the Korean peninsula. North Korea's foreign minister is visiting Russia. Naturally, that sparks talk of more coordination between them. Although South Korean officials seem to be pouring cold water on the idea of a Trump-Kim meeting happening during his trip.
So, okay, let's try and wrap this all up for you. The market's kind of in this waiting game, right? The dollar's steady. But underneath, there's this real optimism about global growth driven by the U.S.-China dialogue, and that's pushing up copper, pushing up those riskier currencies. The whole week really hinges on how the diplomacy unfolds, especially the Trump-Xi summit, and what the central banks decide to do. Those are the main risks.
Right. Okay, let's leave you with a final thought then, something that really captures the contradictory feel of this moment. Think about the immediate concrete results from the U.S.-China framework, big soybean orders coming, that rare earth delay.
Yeah, tangible stuff.
Versus the immediate punitive action against Canada that slap on 10% tariff. What does that huge difference in approach tell you about how the U.S. values its traditional trade partners versus these emerging alliances in Southeast Asia and the Pacific? Definitely something to chew on as you watch things unfold this week.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.